error there where my mic wasn't, I don't know, probably not connected to the PC. Yeah, I was saying earlier on, it's been some time I have not been doing this video to explain about candle entries, and looking at the dates, actually it's been 2 months already. We'll try to do as often as possible, but at the end of the day also we need to have enough of candle entries, for us to actually make this video workable. And for those, I noticed there are some new people coming in, students coming in. Those that are new, we are only using the entries based on the areas given in the reports. And we are only using the morning star, evening star, which are 3 candle patterns, and the bearish and bullish engulfing patterns, which are 2 candle patterns. And also just now, I did mention that I received questions from Daryl. And yeah, I will answer those questions at the end of this presentation. And as usual, if you have questions, please feel free to ask in the chat, and then I will address them, whenever I pause in this presentation. Okay, so without further ado, let's just move into the entry candle patterns. Now, don't worry, because as usual, these videos will later be uploaded into YouTube, on YouTube, so that you can use it as reference again. Yeah. So okay, so let's look back. Right now, this is what I'm doing here is that we are capturing all the trades that actually trigger from the report. There was no skip, because we do from on a week-to-week basis. One of our team members, they actually post the results on the Telegram, and from there you can see what those trades. So that's how we put it from the Telegram. We go back and track them, and these are the results right over there. So what you can see from here, the area to look for the sell is the 0.6820, right? So at this level, you see, if the Aussie dollar makes a new week high and stays within the 0.6820 zone. So what do you mean by that? So you can trade up to 0.6840. Oopsie daisy. So up to 40 right here. Yep. So this one you can go to 0.6840, right? So if you can go to 40, no problem. But if you look at this in 40 is way up here, right? So anywhere from 6820 to 6840, and you see evening star pattern appear, and that's what we see here. Now this is where you enter right over here. See, so here the price went up a bit, and then no cause of concern, because this is where usually I put our stop loss 1 pip over here, because if we're wrong, we're wrong. So this is an evening star, yeah, evening star, and that's where we entered. And then probably here's be 121, and by the time here, we had our 221. Now, in terms of the candlestick size, what you can see over here is that we had very medium-sized candle, and then moving into smaller size, and then back to fairly bigger bullish buying. And then again, you can see what happened over here is that the sellers started turning into more serious sellers. Because how do you know that? Look at the size of the candle right over here, right over here, right over here. They're much bigger than here. You see, previous candles right over here, they are about the same size as this group right over here. So there is a shift in momentum of the sellers. But look over here, what happened next? These sellers, as they came in fast and furious, but you see, in one candle alone, these buyers came in and wiped out 2 big huge selling movement over here, and that continued right over here. But right after breaking the tops, right, they start to in a way reduce in the momentum, right? So this came after this huge buying and then huge selling. But the thing is that it's not really far away from here, so that presented a good entry, and that's where we entered right over here. Okay, so that's the Aussie dollar just before the new year, so it's a good way to end the year right there. Then we had the sell gold on the 30th December also right here. So now if you see this line over here, this actually refers to the zone, right? The zoning area. So this is the 60 area, and if you take away $20, if you remember at the beginning, right? So for gold, we take away $20 plus minus $20 as a zone. So if it's 1860, you can trade anywhere from 1880 right up to 1840, the $40 inside that zone. So that's why we marked it here to help you see that this is the 1840 level right over here, right? So as usual, what you can see is that there were buyers, and then stronger buyers, and they come in, and the buying started to actually drop in the number of buyers right over here. So what you can see is that all of a sudden the number of sellers came in, and they were really good sellers. It's quite furious over there, but unfortunately it did not give us at least the 1-to-1 for us to break even our trades. And then it came back over here, and then another selling came in right over here that created the excitement. Say maybe right now then you get your 1-to-1, but because of that we were not able to, and later on we were stopped up. Okay, so you had a winning trade earlier on, one, and then here is a losing trade. But the difference is that when you win right over here, you win 2-to-1. When you lose only 1% kind of thing. So your wins will definitely be able to cover the losses right over here. And this is what I recommend to people. Whenever you win, right, try to go push your price a bit more. How far you can push will be based on the statistics that you calculate, because every single asset price, right, they do have their own kind of calculations. How far can they go? So you can time that with the time of the year, the time of the day, and so on. And I don't use it, but some people, they do use like the ATR, average true range, and you can see on that day what is the range of the market. Then from there you can do that planning. But definitely a good way to be profitable is whenever you lose one. When you win, you have to win more than one. Okay, that is one way, especially if you're doing midterm swing trades. Yeah. Okay, so next one is the Aussie buy. That's the 6th of January right there. So you can see clearly one single candle that practically engulfed every single candle right over here. Now, if you were to call this would be a morning star. Why do I say that this is a morning star? The center candle over here is a small doji-like candle. So strong selling from a strong one started to fizzle out, and then it tried to push up and coming down again. But what you can see is that the size of the sellers the momentum has also dropped, right? So another way to just something special for you guys to understand better is to look at the angle. This is something that I always recommend. Look at the angle of the drop. This guy here, this angle, right? And then look at this angle of the drop. And from the angle point of view, can you see which drop is stronger, right? This is stronger because it takes less time just to come over here. This is a steeper one. So that's also one way that you can look whether the momentum is dropping or not. And the second way to look at momentum that I would recommend is the basically that one I think will be less stressful is the size of the candle. If the size of the candle is not really that high, then yeah, I mean that's the best way. You can see big candles, big candles, big candles, and then after that small candles, and you have one huge big candle right over here, and that was the beginning of that entire upwards movement. Yeah, so that's the Aussie dollar, and then this one you can bet that this is easily at least 2 to 1 or more than that. Then we have the natural gas on the 6th also, and this is a pretty straightforward bullish engulfing pattern right over here at our given level. Yeah, so this one is the plus minus 20 cents right over here, right? So but it came to our level of 350, so there were none. So this one is another trade that you can see it's definitely more than 2 to 1 return right over here on the natural gas, right over here. Now this is another trade. This is the Ether trade. We had this here. This one is a tad different. So what I want you to see, right, in this particular area here, we have the prices spiking. So when you see long candles like that, it is a way to tell us is that, hey, this price probably can be pushing up from here. And to not only that, right, this particular area right over here, you had a lot of long candles telling us, this particular areas right over here, and there are a lot of buyers testing the luck. And then after breaking over here, you won't say that, hey, are they still testing the luck? Let the candle close first, and then we'll see from there. And from here, it gives you a hint already and said, hey, this is quite some nice buying. And how do we confirm that? This guy right over here. So when he went to the top, I want you to focus on this candle in particular. This is called a high wave candle. And what it means that there's a lot of confusion in the market. Confusion in what sense? The market don't know, is it good to go up or is it good to come down? They don't know. That's why it's like a tug of war, but nobody's winning. You see, the price stayed in the middle, right over here. So it tried to go up again and start to pushing down. But every time it tried to do that, same thing. It just stayed up there and came down until it made one decisive one, but there wasn't any follow-up from the buyers, and then the sellers came in. So this is where we sold it. But still later on, it came down. I think if I'm not wrong, this trade was later taken out also. Because if you understand about the momentum in another context, what you see is that this is a strong impulsive move, right? And then remember in my report, what do I usually tell people? Or if you have a slow corrective one, then be careful, another up move is coming. And this is what you can see. Very pretty slow corrective movements that you're seeing right over here. So what happened next was this guy just went up there. Okay, so it's okay, because it's common, you can't be winning all the time. Yes, you can have a pretty good run, but you do bound to have some losses there. So if your money management is strong, this is not a cause of concern, which is quite obvious. Okay, so then what happened next? This where, so that's the loss over here. And we had another so now this part, I think you all need to just concentrate right over here a bit. Now at this level, this would be the high, correct? And if you want to take again the trade, this bearish engulfing trade, you must first let this high be taken out first. It must make a new high, then only they form the candle pattern again. If it do it halfway, do not enter at all. Okay, I do not do. That's why that will prevent you from doing any chasing trades. That means you see something like this, and I say this is an engulfing pattern. I will enter over here. No, prefer to take it at the when it form the latest high or it breaks a new high. That's where I only look for it. Okay, that's how I deal with my trades and develop the consistency that we post. Is that if you take trades at the level that we gave you, here are your results. So we wanted to keep that consistency over here. So yeah, so if you have been monitoring the areas, right, then definitely you'll be able to identify them and execute these trades yourself. Okay, so cool. Let's move on. So don't worry, guys. If you have questions, you just please type here, yeah. Okay, now this one is also a sell gold trade right over here, and this sell gold trade, notice this particular area right over here, right? So what happened next was there was a new high right over here, but did that turn into an engulfing pattern? The answer is no. And then you had a new high again right over here, and this turned into an engulfing pattern, and we call this the what? The evening star right over here. Okay, so this trade later on was also taken out from here. This spike up took the trades, our stop loss, and then yeah. So if it and later on, I'll explain why in this particular area there's just no entry, even though it made a new high, and this looks a close above the opening, below the opening price. It should be a sell, right? But it wasn't, and why? When it comes to the end, I'll explain to you. Okay. Now, this is Bitcoin. Bitcoin was also an evening star pattern, and it was inside the green zone. Now, for Bitcoins, usually what I do is, because this is 5 digits, right? So for 5 digits, I put in 2 plus minus $200 right there. So this is an evening star, and we got a 1 to 1. I'm not very sure. Is this a 2 to 1? You have to refer to the weekly stats that we send out, then you have a better idea right over there. Okay, but nevertheless, this is it, and then that's where we enter. But you can see straight away a few things coming up. Now, if you can see as it's going up, right, it's forming more of these rejections right at the top, right over here. There are a lot of rejections. But the what about the bottom ones? Not so much, you see. These are very like a person that went for a crew cut. This is the only long one. This is fairly the same. This is a bit there, but this is also indecision, with saying that, I'm saying like whether it's going to go up, it's going to come down, not very sure. But the rest are pretty clear cut to say. So one can see that there are actually a lot of people actually trying their luck in selling whenever prices make a new high. But in terms of there not much long tails, except this guy, which is a longer tail one over here. So they were more sellers, and when a true seller came in, that created the evening star, and so prices came down from there and gave you your target. Okay, so this is something that you have a look and see the rest. Yeah. Now, this is Ether. Ether also the same, and this one just close below the opening price, then thus triggering the thing. But over here, is this an evening star? The answer is no. This is a bearish engulfing. Why do I say that this is a bearish engulfing and not evening star? It's because the size of this candle over here, if you want to categorize this evening star, it must be in the center, and the body is 1/3 of the entire movement. This is more than 1/3. This is probably a little bit near half. So this in turn turns into a bearish engulfing pattern, and from here you just I think this trade barely touched 2 to 1, and that's about it. Yeah. This is a special case evening star pattern. Now, why do we say that this is a special case over here? Usually evening stars, they are you know, this this thing here, usually they do not surpass this guy. They stay right around here. They make it a very small candle. That's a way for us to like identify and say that, hey, this is a very how would I say, this is a mm, a zone that's losing momentum, not many buys and sellers right over there, right? So that's important. But you know, in situations like this, if like it's a special case, why do I say special case? We actually, before entering this, we among our traders, we discuss ourselves and say, does this particular area merit a trade? Because when this is a special case kind of thing, it carries a bit more risk, right? Because what you see is that there are also quite a lot of activity over here. And if you look at the tug of war, although it's indecision, but still, this is a pretty long week down, right? But why did we still sell it? Okay, why did we still sell at this place? Is because when this is a special case over here, we were actually looking into really selling the gold. We do not think that the gold would be going higher. So in actual fact, at that particular time, we were just believing that, you know, gold should be coming down, and we took the risk. So in situations like this, you know, the more you trade, then you will develop that kind of understanding and saying that, hey, this probably could be the movement that we have been waiting, so that you can get a good trade. So that's why we took this particular trade. But if you are not well versed with the pattern, it's fine to just miss it and not take this trade. But if you notice that since the 6th of January, there have been a couple of trades, and yeah, we've been making some good progress in the trade, so no problem for that, right? So, but anyway, this is to help you identify this one of the patterns that we're looking. And then this sell trade right over here. Now you can see that these were the selling coming in, and then after that price was moving quite sideways, and then this is a very strong movement right up there, right? And then equally strong strong buying, equally strong selling right over here. So how do we know that this will equate to a confirmed sell? All right, excuse me, just let me drink a bit of water, sorry. How do we know that this is a sell? Is that it's able to close at least 2/3 of the entire candle. It's able to, number one, close below the opening price, and number two, close below the entire range. This is the entire range. It must be 2/3 of that range. And this is how we identify that this is a candle that we are looking for. Okay, but unfortunately, the buyers came in and took control situation, and this was also another losing trade right over there. Okay, but this is definitely one way that will also answer the question. But later during the wrap up, right, what I'll do is that when I do wrap up, I'll put this thing again so that you can understand what you mean by 2/3 of the candle. So as you see more examples, then you will understand. Now, this is the dollar index, 13th of January. This is another case of the 2/3. What you can see here is that this body is like 1/3 of the entire movement. So this can, you know, these are equal size bodies. Look at over here, all equal size body with the big guy right over here. So is this a really small, really small body? No. So what we wanted to do is that look at this engulfing pattern right over here. So what you can do, measure from this top to this bottom, right? 2/3 of the movement, where is the line? So as long as we have a closing above the 2/3, I would consider this a bullish engulfing pattern, or if this is a smaller body, I'll call this a morning star. And that's from here we were able to take our 2-1, because these are small size bodies, then making 2-1 is not an issue. So sometimes the market will give you this kind of bonuses, small bodies, so that you can profit really well. One of the examples, I think, recent examples would be the S&P 500. If you have taken the bullish engulfing pattern, wow, that was some huge movement right over there. Okay, so this is that. Next is the sell Aussie, and you can see the moment it hit our 70-60 area as per report, and then this is the engulfing pattern. Now this is, if you look at the size, this is the evening star, and this one was a big drop down all the way down over here. Definitely more than 2-1 right over here. So look at the number of sellers, they just outrank and outbid in terms of size of the previous sellers, and as well as the previous buyers right over here. And you see that big movement. Same thing with the New Zealand dollar at the end of January. Same thing, same movement over here, because it was the same. Now, for those that are trading this at the same time, you're selling Aussie dollar, you're selling the New Zealand dollar, what can you do? Because you must also realize at the same time that the Aussie dollar versus the new dollar, they move at the same time, right? Because they are sister currencies. So in situations like this, sometimes I don't really recommend that, both you have equal lot sizes, because if you lose in one, you lose the second one too, right? The chances are very high, although not every time, but you could say most of the time that happens. So if let's say you're risking 2% per trade, right? So each trade, the Aussie dollar sell and New Zealand dollar 1% each. That is one way for you to deal with our money management, because you're trading the same thing at the same time. Yeah. So that's what you can do over there. So you can see the size of the sellers. This guy is the biggest of them all, and that's where the big movement down is. Right. Next is the NASDAQ. NASDAQ, you can see these are slow movements up. This is slow corrective movement up. One big came to our level, one big one coming down, boom, it goes. That's your 2-1 over there. So quite easy because of this corrective movement. So always train your eyes to see whether we are in a corrective movement. If yes, yeah, there is a candle pattern and comes to our level that we gave you, go for it. Okay, just go for it. Now, this is a natural gas on the 18th of January, and we are looking for the bullish price action at 3. So if you put 3 here, if you add 20 cents, will be 320. That's where this line is. So it came to our 320 zone, and that is the bullish engulfing pattern. And there you go. This, if I'm not wrong, is a 5-1 trade. Why? Number one is the candles are small. But sometimes I don't take small candles, but in this situation I took it because if you see, there were really all small momentums leading to this place. They were already small momentums already, which means all of them were small candles in the first place. So coming down to this level, I know that this is the 1 hour chart, right? So you can calculate 1, 2, 3, 4, 5, 6, 7, 8, 9, and then trigger 10. It's almost half a day already they've been following this kind of momentum. That tells us the type of participants in this current market. So if you have a buy trade and size has been this for a while, of course we can accept. So that's how we took this trade, and then so that's where your nice return is. So next one over here, this is the euro dollar sell at the level 1.09. And as you can see, this is the engulfing pattern right over here, and then more than 2/3, and that's where we took the trade. Yeah, this is another one right over here. And this is another engulfing pattern, you know, small, this one, and it came in the big one after covering these two. Definitely is more than what the 2/3 already, right? So no issue right over there, and you took the trade, and that's it. We got our returns right over here. So next one is the Aussie dollar the sell at the 71 area. I gave two areas, 0.706 or 71. Okay, if you look at the 706 area, 7040, that's the lowest place. This is the lowest place at 74040. There were no engulfing patterns right over here. So yeah, I'm not interested to take it. And then next it went up, and over here there was this engulfing pattern. That's how you take this trade right over here. But this one, he only gave us a 1-2-1, not much. Yeah. So okay, so next is the Nasdaq again. So this one has no there's no debate over here. Look at this top right over here, took out the high, and that's where the sellers came in. Follow on with the sellers right up to here. So it's good. Now, this is another sell. What you see, the size of the sell candle, they are almost equal size as the rest, right? Except this big one over here. Look at the body size is almost like this one, bigger than this, bigger than this, bigger than this, almost the same as this. So that tells us the momentum is about the same. This is where you sold it, and it almost took us out. To be frank, at that point of time when we took this trade, right, I thought that it's a gone trade there already, and to our surprise, it wasn't. So that was some pleasant surprise, and we enjoyed that, and so it's good. So that's the sell right over here. So then we have the natural gas right here, the 18th Jan, the $3 movement. So no problem. It was a nice move right over here. So these are more like the standard patterns, right? No argument. Simple, straightforward. New Zealand dollar, the 30th of January, we had 2-1 loss, and then this one covered back our losing trade. So no problem over there. This is okay. This is fairly straightforward bullish engulfing pattern. This is the dollar. It came to a place, small movements, and then a big one came in, and then we go. So this one is Morningstar. Why do you say Morningstar? This is a small body, and Morningstar and Evening Star, we do not take into account the color of the center candle. All it needs to do is just to have a very small body, and that's it. That's more than enough. And then this is a natural gas. On the way down, remember we were looking at natural gas only started pushing from 2.06 level, but nevertheless, at all the levels that we gave, we're still able to return some nice returns, especially this one at least gave us a 2-1 return here on the 3rd of February. So this is a fairly standard bullish engulfing pattern. Euro Aussie, a fairly standard bearish engulfing pattern. So that's why I said if you're not well versed with your entries, take all those standard ones that you said, you know, there's no guessing there. It's pretty straightforward, then go for it. Yeah. This is another dollar index one that we sold, and then bump 2-1. That's it. Thank you very much. Within the zone. So always remember to put an alarm, yeah, alarm whenever price comes to your zone, but do not trade when the wick has already break above the zone. So for example, this is a 103.9, right? So maximum you can go is 104.10, you plus 20 pips, correct? So if you, let's say it triggers you 104.11, for example, it's above our allowed maximum zone, I do not take it. Okay, so I'll show you an example. I think the gold yesterday, gold is definitely a good example when it went above the zone, I did not take the trade, even though there were engulfing patterns. And true enough, if I've taken it, it would have been a loss. And because I felt that, you know, gold can actually go to 1855 area. And yeah, I think Friday closed at that area already, right? Okay. So this is the 6th of February. This is the morning star pattern right over here. So nice return right over there. This is the Binance. It's also a morning star. Look at the size of the candle. It is the same as before, so that warrants an entry for you to slowly catch it up. So this one from about 287 area all the way, you know, it's just some nice returns. Definitely more than the 221. It's much more than 221. This is the Aussie candy. These are fairly straightforward kind of morning star, especially those with a small body and a long-legged doji right over here. Whenever I see this, you know, it gives me that confidence. Even to go sideways over here, nah, no problem. We'll catch it. This is the silver. Now this is our losing trade in February right over there. I think some of you have been familiar with this. So this is a bullish engulfing pattern, right? And the size of the candle is the same as the previous one, so no problem taking it. So what happened right over here is that you have seen only the final movement of candle. It looks like this, but in real life, what really happened was that when at this level over here, price came down, took us out, and then only went towards our direction to give us a 221. So there will be times like this, and you go like, oh, why did you move that way, man? Just move the other way around first, give us some profits. But yeah, I mean, it's okay because this is understanding waves, and we're playing a probability game. It's just that we have higher probability, that's all. So it's fine. It's once in a while you lose. If you're like losing 10 times and you're losing 8 times, that may pose a problem, right? But other than that, if you've been following the levels, I think it's fairly straightforward and easy, yeah? Okay, so let's move on. Yeah, the Candy Yen. We tried to sell where the arrow is, but to no avail. Later that was stopped out. And further up there wasn't any chance for us to sell anymore already. So it's fine. This is a losing trade. Now, if you look at this SPY euro dollar on the 8th of February, this wasn't a trade. Why do I say that? Is that look, the wick actually came out from the zone, because maximum you can sell and as long as it doesn't break 1.0630, right? So this one was below 30, even though it gave you your profit one, right? So didn't much. You see, when it's out from that zone, my advice is don't take it. If it triggers inside the zone where none of the candle wick or body protrudes out from that zone, then okay. But if it's like outside or before the zone, it means this is before right away, because looking for the buy. This is after the zone. So either before or after, we are not interested. Okay. So you do better. Sometimes you win and you will say that I should have done it, but I've done the stats. Yeah, most of the time, so far, you know, that can change one day, but so far, most of them are losing trades instead. Yeah. So remember, when it's out of the zone, even by 1 pip, I am not interested in the sell. Now, there are question also here is that let's say in this situation, let's say this thing right over here, it's a morning star, right? And this is the closing price. Let's assume this is closing above the closing price. We can take the trade. But if it's like you look at it and it said, hey, it's like the same place, you know. So how do I know that this is a trigger or not trigger? Now, for it to categorize as a morning star, I need this candle right over here to close above this is a bearish candles, right? So this is open, this is closed, right? To close at least above by 1 pip. If it's not 1 pip, I'm not interested. Okay, it must close at least by 1 pip. It cannot be less than a pip. That means 0.9 pipette. I'm not interested. It must be 1 pip. That's my personal rules right over there. Okay. So this is a pound dollar trade on the 8th of February. This is the Morningstar pattern. After it happening, it gave us some scare for like 3 hours, only to then put the one of the brightest smile onto our faces for some time, right over here. Okay, so it went there. Next is the Aussie dollar, the same pattern. So yeah, here it happened before the 0.6810 level. Yeah, so it came to about 11 level, so it's still within our buy zone, and that's where we caught it and it went running. Okay, yeah. So next one here, look, price broke up from our buy zone. Are we taking it? No, not interested, although it went our way later on. Yeah, but not every day is a Sunday that it'll go our way. So I'm not interested when it breaks out from here. This is once Euro Aussie sell, and this was a 2-to-1 return trade because I remember it quite well. This is nearing the end of February already, and those that have been following us, you would see actually February is a pretty good month, and you know, those trades that when we gave those alerts, you've been following them and catching all of them would have returned you some pretty nice returns in the month of February. So this is a NASDAQ one. This is also a 2-to-1 trade. Big down, big up, and then the whole thing trickled down, followed by last minute hoorah over here and then go. Now, one good way usually is that I like to see leading towards over here. That's a hoorah, big one, and then after that it slows down on momentum, and then one big one that not this size of kind of momentum, but this group that's coming down here, that kind of size, and goes up. Those usually are very strong patterns that I like to take. Yeah. Now this is another Morningstar, close above the price over here with small body. Gave us a bit of uneasiness for like 6 hours before moving up. And then this was the sell dollar, 27th of February, right over here, push down, took our trades. Okay, so now how did the candle pattern act as a filter for our losing trade right over here? Now the key point right over here, this was one trade that we did not take, right? So now what do you see? You see a long-legged thing. It can be a full thing also fine. Okay, it can be a full thing. Let's say you extend the candle a bit more right over here, then it's small body. The key point over here, number one, okay, so let's rub it away. Yeah, it must close below the opening price right over here. One. Number two, if you measure from here to here, right, it must be more than 66.66% of the entire candle. That means it must be more than 2/3, more than a pip, more than the 2/3 of that candle. Only when it's more than 2/3, I would consider this as a trigger pattern, be it a morning star, evening star, bullish engulfing, bearish engulfing. It must close by 2/3. Okay, so that will also help the questions that Daryl posted right over there. Remember the 2/3 thing. So let's move into, now this is the thing sent by Daryl right over here. So I'm going to change the color a bit right over here. Now the question here is that if you were to measure, right, is the 2/3. Where is 2/3? Probably 2/3 will be run over here. Did it close below 2/3? I don't think so. But if it did, then you can take the trade. If it didn't, no. Okay. So this one looks like it didn't close below 2/3. So this thing, no. This one definitely close below 2/3, no problem. This one, this is a 2 candle pattern, right? 1, 2. This is a small body, so I wouldn't consider this as an evening star. I would consider this as bearish engulfing. So no problem because it closed below the 2 candles. Boom. Okay. Now, this particular candle pattern over here, if you were to look into it, actually, if you study candle patterns deeper, this is a special version of evening star, but I do not use this as part of the calculation over here as part of the entry. So I do not use it at all. So maybe this is something that you would like to do some research and to see is this a regular pattern happening on your pairing or not? And if it does, you can take it. And the reason why I'm not using it over here is because these are special patterns right over here, and it has to be something common that's happening again and again in that particular pair in that particular time frame for you to use it. So this, I wouldn't say this is not. I would just say this, you have to double check. Okay, you have to double check. I'm going to put exclamation mark 1 over here. So you have to check whether this is something common for your pairing or not before you enter. This is okay. These are special situations right over here. I need to see one more candle right away. How is it like? Is it something like this? If it's something like this, then it will be categorized under this category. Let's say without this guy over here, I wouldn't enter because these are two small bodies, still small body to me. And if there's one more here, yeah, you'll fall under this category. But let's just say there is not, is something like that, and then coming right over here. Now, if just following their rules, then this is not I wouldn't call this a bearish engulfing pattern that is of what I'm looking for. No, it is not, and usually I will skip this trade. Okay, this one, no issue. Okay, this one again, did it close below 2/3? If it did, no. So by the looks of it, I think 2/3 is here. It's probably missing out, so I wouldn't say this is okay. Now, this particular one over here, this is tricky. Number one, you can see that, look at the size of this body, right? So the halfway mark is roughly about here. This is the halfway mark of it, right? And it's not even closing the halfway mark over here. That's, in other words, it's like, imagine the buyers, the sellers, the buyers, and then the sellers, and the sellers came in, and then after the buyers came back, and then after that the buyer, and then it went up and it stayed over here. Now this is a 50% mark. So who actually won? Even though this is the black color one, but who won actually is still staying in the buying zone, like the 50% to divide it. So in these kind of situations, too long the legs, the body is too small, I would not take it. Okay, so this one is the special case that we talk about. So this one is not an issue. I would take it, no problem. This one, no problem. This one you see more in stocks and on FX is usually on Monday. And then stocks you see more. So this is okay for me. Now this one, 2/3 is right over here, did not close below 2/3, no. Okay, so I hope that this thing to help you a bit in the understanding. Now the thing is this, when we come to looking at the candle patterns, right, you just need some experience of looking at it again, and after a while you do develop that kind of feel in the market to say that, oh, is this something that I'll take or not? Okay. Okay, so there's a question. Hi, Justin. In your March 3rd report, you mentioned there were 2 sell trades for dollar yen. Was the first sell trigger? Let me take this up. Let me cancel this first. You gotta help me already. I can't at this particular level. I can't remember the. So March the 3rd report. Yeah. Mentioned there were 2 sell trades. No. Oh, okay. Here, and the second one is here. So the first one, this one, this is the bearish engulfing one. Yes, this is bearish engulfing, and then this is also bearish engulfing, because this is just too small of a body for me at that situation. But 136.9, yeah, 136.9, correct. Now I did now I just need to update you guys a bit, yeah. This, I don't think I took this trade. Now this is a special situation pattern that, this is, although it fulfills as per bearish engulfing, but this is not something I do like to take, whereby it made the new high right over here, right? This is the high, correct? And then it made the new high, and then there wasn't any engulfing pattern, and then you notice that this is a pretty big candle over here. So if it had pushed this thing as push up a bit higher here, I've taken it. But what you see is that I noticed that they were all in the same area right over here. Even though they were small candles, but they were like all in the same area, not far away from this guy. So this is more of an experience thing. I think it was more of this guy as being the candle that need to be engulfed before it start moving down, right? So because of that, I discussed with the traders. I did not take this trade. I have to be frank, I did not take this guy. But if you have taken it, you would have got a 1-to-1 only, roughly about here, and then it reversed. But this one, yes, we took a trade. We gave you the alert, and yeah, on Friday, I think the target TP2 is about 61 area, if I'm not wrong. We are not far from hitting 2-to-1 already. Yeah, so those who have been following us, you would understand this one, right? So now this is also another candle pattern I like you all to know, but this one is a bit more of an experience kind of thing. It's just my personal preference. I don't like it when they just break it a bit and then they're like not far from this big guy. If let's say I give you an example, yeah. If you have the big guy right over here, and then you have the candles leading up, you're still not inside the big guy's body, then yeah, I would take it. I would take the trade. But I did not take it, this guy, because look at this the big guy's body. Oh man, it's just shaking. The big guy's body is right over here, and everything is happening inside the big guy's body. So this is something I'm not really keen to take. You can put it this way. Next time you can just draw a line between big guy. If you have the candles are above this or closing price, then no issue. You can take the trade. But if it's inside that body, I'm not that interested. I did not take this trade. I have to check back and report. I don't think we took it. But this one, I am very sure I took it, because in my live account also there wasn't any of. We didn't have this trade, but we had this trade and it's ongoing. Okay. So I hope that answer your question. So any more questions, guys? So yeah, you're welcome. Now, in terms of the report results, right? If you have taken all the trades in February, from February the 1st right up to February the 28th, you have taken all the reports there, and if you have your risk is only 1%, and you diligently follow the levels, your return at the end of the month was 8.5. This is based on the moment you hit the 1-to-1, your risk is 1 and your profit is 1. We take this area and we break even our trades. And yeah, at the end of the month, if you caught all, this is the return. But I did not. We missed some because it's not to say we didn't miss, but due to the some profit thing, we didn't get it. We didn't get the full thing. But I've adjusted my portfolio so that to reflect it in the future, right? So this is something that you can look into it, and it's one of the safest ways swing trading that we think of. Okay, so I think there are no more questions with that. I wish everybody a wonderful trading week ahead next week, and take care. Okay, so good night, everybody.